Okay, here we are, Wednesday, 1:15 p.m. So, after we close up the positions, early Monday or mid-Monday, um, basically I wanted to get out when we'd had a couple good days. The markets that appeared to be trending out of that volatility was working, and we'd had a couple days, so we've always thinking about that 2 day rotation. So we got out, and yeah, markets have tended to sort of go anti-trend, even to the point that you can even question if there's a trend in force. Of course, the longer term trend in the stock markets, as you can see in the Nasdaq, of course, is down. But as we're shorter term traders, we could see there's this really range that's actually formed, this high here and this low, you know, and this has been going on for the past week. So we sort of want to, be mindful of that. And it's a very wide range, so it's definitely tradable. So if we look at this, this is the 35,000 contracts per bar, the NASDAQ. So each one of these areas between these grid lines is a day. So if there's that major news high, and since that point, we haven't been able to get up there. We've been come very close twice, and one time that was over a week ago, and that other time was today. And we again sort of at least rejected that area temporarily. We didn't even get above this high. But we can see some pretty good momentum. So we broke this low, and this was what you would call a bear trap or a false breakout move, which we can see moved pretty strongly up to the upside. So we were short here and we covered, but didn't go long at all. But, you know, sort of keeping in mind that the trend is down, but there was a big move here that looks like it's strong enough. Could have capitalized on that. This certainly could have been a trade when you see this bear market trap happen and it comes through, it closes a little higher. But I just didn't give it much credence. I don't like to trade against trends. But here we are at the top of this range. We've sort of rejected it, and we've had a little bit of momentum to the downside. So if you're really aggressive, you could come in and try and short it here and wait it out. But me personally, it's ticking back up towards the highs. Sometimes we can goof around on these highs for a while. Sometimes we can start to go back down and come back up. So I prefer a little bit more confirmation since we're a little bit more range trade environment. I mean, when you first hit major lows like this, and then you first bounce, then you want to be more aggressive. You can see how little time you have to get short here. Little time you have to get short here sometimes. But now that we're a little bit later stage, you can see at these bottoms, if you try to buy these bottoms, how choppy and difficult it is to try to catch a bottom here. So, uh, testing those lows, it's sort of just like we've already run our course, and you can see that each time that happened, it turned around. So now that we're at these highs, I don't want to mess around. If you tried to short here and it just sort of bounce around like this, you don't want to sit there for 2 days crossing your fingers. So I'm gonna wait a little bit, give it a little bit more time to push, 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 push. It seems like with momentum here, there's a good amount of buyers in here. So, but now that we've come off that high, we had this gap up overnight. We have come up to this high. We came close to testing it, but not close, not too close. So technically, now that we've started to move up again, this would be a very important point here. If it breaks this area, if it breaks this gap area, that we would go down fairly quickly. But if it may chop around here, and it certainly could go retest up here, so I'm not that anxious. Um, Now, gold, on the other hand, so here's the daily of gold, and it turned into a straight up rocket ship to there's this big peak here. So of course we sold some. I think we maybe sold some around here, and we missed out on those last part, but then we sort of wipe our brow because we didn't get back involved. We want to wait for this sort of big correction here. But again, knowing that stock market's up big today and group gold's down big today. So again, this sort of reverse correlation we see happening. If you look at the gold, so here's that peak, and we've had a pretty good sell off to the downside. And if I grab a chart that this little bit longer term chart, so we can see this whole trend off this bottom in this strong rally up. So there you go, 1, 2, 3, and in typical commodity fashion, it ends in some big sort of capitulation to the upside, and then boom. And this is a pretty steady selling, but you could see, this is during the liquidation crisis where you have people bailing and you have these big bounces, and so you could see there's a fair amount of buying activity there. And this market I mean, this has had buyers the whole way down as it sort of chops its way down. So you can see the difference in character. Here's just a lot of volatility in a liquidation situation where you have a very strong momentum down, but a very high pop up. That's an example of a lot of shorts selling on momentum and then short covering. And then this is more what a dip buyers sell-off looks like. So, we've corrected for 2 days this much down. So just based on a timing basis, and here's this breakout area, and we consolidated a little bit above that. We were buyers in here, and like I said, I think we probably sold somewhere around here. But this is a fairly, even if you wanted to start buying here, this is a fairly good place to start buying. But I'm going to wait a little bit and see like I said, the market's going to jiggle around at the top. Maybe this will jiggle around at the bottom. So I'm going to give it a minute. Maybe, a lot of times these dip buyers are coming in so quickly to buy the dips, and then they get tired of waiting, they're impatient, and then they sell. So, um, not in a hurry to get back in. But again, this has all been like establishment of new trends, and then we're just in retracement mode. So all these are sort of dip buying modes, and they all should be bought, especially for long-term traders. Um, and the euro's been fantastic. So here's the euro on the daily, and we could see how it's in correction mode right now. It looks pretty choppy there, but on this, this is so 6,000 contracts per bar. If we look at this, so this is about the past 7 days. There's this peak here. So we could say, and then we've got a gap down overnight, just like stock market gapped up, gold gap down, euro gap down, and now it's down back here. Um, so it's just like gold. It's probably okay to start a position in here already. If you're a little bit more aggressive and go ahead and start buying contracts. For this resumption of that trend. But you're only doing that with the strongest markets to the upside and the weakest markets to the downside. And what qualifies as that? Really, gold and the euro are the strongest to the upside. And to the short side, um, the setups, like I said, the stock market, you could, if you were aggressive, you could start shorting now. But stock market's always a little bit, a little bit of a tricky market. So, but you could see this. So there's this big consolidation area before we had this breakout. Well, we're back right back there, and this has had some good buying in here. So that's probably a buy in there, and that's the case with all the currencies. In fact, all the currencies yesterday, when they first had their first week, meaning weak as in not strong day yesterday, and then today's day two of that sell off. But look at this, euro and British pound both had 3-bar triangles, meaning that day it went down yesterday was within the prior 2 days range. Japanese yen and Australian did not form 3-bar triangles or inside bars, but they were close, but they still counted as a no, but they just peaked above a higher low. But the Canadian dollar also did that. So all the currencies look like they're just sort of setting up for an opportunity to buy them here. Um, so soybeans is showing some strength today. Of course, we sold it at the Not very advantageous price the other day, but you could see here on the daily, you know, there's this consolidation area, and it did push above the high from 2 days ago, but it's come back a little bit. So it still looks like it's forming a coil here. You know, we had talked about how, soybeans really had this liquidation event during the when everything else was being liquidated. It's just more fast money goes into it. And a lot of times there's spreads between corn and soybeans. So you could see corn didn't have a liquidation event and it went up and now it's down. Although it's been stronger in the past month than soybeans, it's down and soybeans is up. And that just shows that these spreads are being reasserted because they cut acreage in soybeans and they increased acreage in corn. So yet corn was stronger during that liquidation event, and I think that's because had to unwind those spreads to raise capital. So if they have a long soybean short corn spread and they want to unwind that, it's going to put upward pressure on corn and downward pressure on soybeans. So now soybeans is starting to move up a little bit, and corn had a little retracement here. But ultimately, like I said, I think they're both going to go up. But I think we see a little bit of evidence of those spreads being reestablished today. Um, Wheat, there's don't see much to do with wheat right now. Again, this is springtime when wheat doesn't necessarily have the same interest that soybeans and corn does. Wheat has its other times of year that it does its rallying, usually at the June after the summertime is over. Um, a lot of crops have been brought to market and sold, and then it will start to move higher. But live cattle, we mentioned, we really missed out on this one, this big liquidation, and it shot up. Same thing with lean hogs. We just haven't been watching it. Coffee, we didn't trade it. This would have been an opportunity. This was a true 3 bar breakout this morning. It appeared here, 3 bar breakout, yes, inside bar, yes. So this was a morning breakout market, but it sort of broke out real early in the morning. And so this was something we sort of missed out on by not getting up real early. But if I pull this up on a much shorter term time frame, we can see, so this would have been an inside day. You see, it didn't quite reach the lows of the prior day, 2 days, and didn't reach the high either. So did have this sort of coil, you could say a correction happening for 2, 3 days here. And so there's your breakout above that. So we could see this was 6:30 this morning, 8 a.m. this morning, and looks like it was this very short time frame from between 6:30 and 8. We had this big rally and some volatility came in. Now we're chopping around, so I don't want to buy this now. I would have expected, if this was a really strong market, it would be holding near these highs, but the moment it got up here, it sort of chopped back. So we'll see on coffee what's going to happen here, but this is a pretty interesting market. We've made some good money trading that. Um, Cocoa, I really don't have much to say about this one. We're still figuring out what it wants to do down at these levels down here. You know, Cotton a little bit about to close. Well, it just literally closed. It's 1:30. But this is just look at this mess in here. It's just a little too choppy. Sugar, not much to do here with these low levels. Again, this is another example of a market that's low near the cost of production, and so as a general rule, you just don't mess with these markets until they start to move higher. So out of those lower ranges that they've been in for a long time. So that's sort of the deal with that. The last one to mention, silver. This is just a weird market today. I think it's peaked out and it's going to start following gold lower, but it was just weird that it's up 2% when gold is down 4%, and copper was higher earlier, but it's down. So this has just been a weird market to see this have this strength today. So this is, again, looks like people had spreads on long gold, short silver, and suddenly gold crashes, and so they've got to unwind those spreads. I don't. That's just a guess. I don't really know what's happening. And copper, again, it has had this unusual strength. I mean, like I said, I think fundamentals are good, but I think seasonals are bad. But I think maybe we just had to have this big sort of short covering thing after this crash. Maybe it's done with its little rally. I'm not sure about copper. I'm not sure what a good trade is right now on it. Here's another chart. Here's this rally off the bottom. So it's been stronger than I would have expected. And again, we tried to short it in here, and I think we had to cover in here. So haven't had haven't had its number, so to speak. Haven't quite figured that one out. Crude oil. There's another one that's uh, been a little funky. Um, I think we made one loss in it and one sort of not so good trade. But 2 days in a row, it literally, like I thought the government's in there buying it, literally as soon as it opened, 10 a.m. So it was down overnight, and then literally at 10 a.m. it starts moving higher at the end of the day. Um, and the same thing happened this day. So here it is 10 a.m. This is 10 a.m. This is 10 a.m. And it just moved higher. So it's like the government's in there buying, but then here, as soon as you think you're onto something, and you start buying in advance of that, and then it just collapses down. So this market, even though it's below what the government said it's going to buy at, it's getting swamped by sellers. Obviously, I mean, this is corporate welfare. You have the oil companies every day wake up and sell oil, and the government's buying it. So, but there may be so much getting produced that supply is going to overwhelm the government's buying, and it's going to go down anyway. And you've got a critical area now it's forming around. If you look at here was the low from a couple of days ago, and it's sort of literally right there. So then maybe that's as low as it's going to be able to go. Again, that's currently at the moment with the government buying and stuff, but that's sort of where we're sitting. So crude oil is a little bit but baffling right now. So not ready to jump in and do anything just yet, just sort of watching. But we've got these really the best trades right now. Most likely would be to pick up gold, and gold is just getting slammed right now. But picking up gold on this retracement here, and the currencies look like the best trades right now. So look at this gold again. It's getting hit pretty good right now. Um, we'll do a little bit different chart here and just get a little bit better view of just today. But yeah, it's found some support here, but it's back at 32.92. So that's literally over 200 points. It's down in 2 days. So, but it's probably close to its lows here. So anyway, that's where we're at. All right. So.